So almost every single hour, what do? The algorithm starts referencing previous hours low, previous hours high. Whichever side has more money is where that next hourly candle is likely to expand. It's very simple. So here's that 130 opening. We trade below that, blow out the short-term lows, displacement above, down into the 5-minute fair value gap. Long this one contract. So below the, using that 130 opening, then stop's gonna go right below the low here. So 5 handle stop, and then I'm gonna aim for this imbalance right up here. So it's kind of hard to see, but if you zoom in, okay, we're keying up off this down close candle. Short-term lows taken, displacement above. 930 high still resting up there. Down the 15-minute time frame, have that intermittent turn low, shift above, boom, and into this volume imbalance. See this tiny little volume imbalance? Now, why am I confident with my stop below this low? Wait a minute, isn't there sell stops below there? Eventually, yes, we can target that as sell side liquidity, but for now, until we reach that buy side in that regular trading hour gap, I'm not anticipating this low to be taken, and it's an intermittent term low. But anyway, back to the actual trading here. Basically, the idea here is, okay, this is a bull shorter block. Okay, we closed within it, within the body. We traded a little bit below. That's okay. This little shaded area here, that was that 15-minute volume imbalance. Repriced to that, and then boom, right at 130, we look at that opening. We see we trade below that opening to do what? Short-term run on sell stops, and then we have a market structure shift back into the imbalance, and then we have a clear draw on liquidity higher. Okay, so that's nothing more secret about this long here. That's everything you need to know. That's everything I needed to know to have conviction to trade this right now. But we really want to encapsulate moves like this. Okay, so you're shorting here and you're pyramiding here. I wouldn't really endorse pyramiding here, but you can. So one contract here, one more contract here, boom, take one off at previous week's low, hold for a little bit further down into that daily imbalance, boom. That's where majority of your money is being taken. That's the only setup you need. Let's say this was a New York session move. This is the only setup you would need for the entire week. Okay, and you can literally just chill and watch everyone else feud over and fiend over low quality setups. Okay, that's all this is, guys. So you don't need to be in every single move. I know there's guys on Twitter faking it, but that's all distraction. Stop letting that get into your mind and think that's what you should be doing, because it's not. In fact, most guys on social media, you should be watching them and doing the complete opposite of them. Okay, just you're subconsciously feeding your mind the wrong things whenever you're watching certain things, especially being on social media too much. Okay, unless you're learning or getting something of value, I advise you to tune everything out on social media. It's become more of a poison than it is beneficial nowadays. Okay, so we already see it going against us right now. I'm in drawdown now. Am I freaking out? Oh man, what if I take this loss? My sell stop's down here. What if I take a loss in front of anyone? Who gives a shit? This is a losing game, guys. You're always gonna take losses. Okay, you gotta stop avoiding them. You gotta learn how to be one with the losses. I know that sounds corny, but you have to learn to embrace the losses, guys. Embrace them. It's a part of the game, and with finding yourself within the losses, it's what makes you profitable and successful. You have to understand that. Okay, you're gonna fail. You're gonna take losses all the time. It's like small losses. But then the winners, when you get high quality setups like this in London, that's what ferrets out your profitability, and that's where you're making your money, because it's way larger than your losses. Stop worrying about your fucking sell stop, okay? Worry about the long-term plan. Have a cemented plan of what you want out of the marketplace. Find your percentage goals and find your way in that. Find your personal model. Stop trying to trade whatever someone else is trading. Whatever works for you and makes sense to you. Okay, I see this in the chart all the time. This is what I want to trade. Yes. Trade that. Wait for it. Have the patience. Okay? Stop trying to trade everything that you see into the charts. Find something that makes sense for you. A simple model. It doesn't have to be complicated. That's one of the biggest problems too, is people overcomplicate shit. They try to add everything into every trade. Okay? So there's just so many things that can hinder your success, and I'm trying to steer you guys all the way from that. And then it's just the patience factor, which most people don't have. That's where most people fuck up, the patience. Nobody ever said this journey was going to be easy, guys, okay? There's a reason why the failure rate is where it's at. There's a reason why this isn't the normal path. It's harder. It's naturally harder. You can take the easy route and say, okay, fuck it. I'm going back to my normal life. I'm not going to pursue this. I'm done with the inner circle. Cool. I'm gone. You can do that. There's nothing wrong with that. Who said you have to be a trader? You don't have to be a trader. You can be whatever you want. Okay? There's so many other things that you can make money in. But if you really want to do this and you have a passion about this and making your own money, you're in the right spot. But it's not going to come to you right away like you think it is. So this 5-minute fair value gap that now turns into a reclaimed 5-minute bullish fair value gap. Okay, and reclaimed is just a fancy word for we used the fair value gap a second time. Okay. Now the more times it's reclaimed and used in a bullish scenario, so if we were to trade higher and then trade back down into it, the probabilities drop. Okay, it's okay for it to trade into it the second time, but once we start hitting into it a third time, fourth time, probabilities drop for it to send us higher. But for now, I still like what I'm seeing here. Okay, I like what I'm seeing there. So this would be our classic turtle soup PM session right here. Boom. Back down below that 130 opening and that original sell side liquidity pool there. If you take a look here, take this up close candle. It's not pretty, but this is a fractal lower time frame breaker. Okay, so we have a low, high, lower, low. This here would be a breaker. Extend it out. Use that multiple times. Let me take that off though, because it's too many boxes. And then what you're going to want to do is you're going to go ahead and map this inversion gap out. And not only would you like to see this small little down close candle hold, you'd like to see the midpoint of this inversion gap hold, and then take us to the buy side up here. Okay. Now, with all that being said, am I going to add another contract? No, I'm not adding any more leverage, okay, especially with the delivery we're seeing. But for now, I'm submitting to higher prices. Getting that expansion above the relative equal highs here, I would like to see that continue to the buy side, obviously. Let's check on NASDAQ. Not quite there yet. So basically just keying up off of that reclaimed fair value gap there. Boom. Touched it one more time. Never came back to it. And that's exactly what we wanted to see. Telling you guys, this is a diamond in the rough here. The stuff you're going to be learning in the mentorship tab, do not overlook it. It'll be a mistake. Alright, boom. There we go. So, like I said, this was the one and only trade on. There's the business. One and done. Utilizing that 130 opening. Buy side up there. Boom. Okay, so Ariel took it on NQ, so she made more money than me here, didn't she? Well, I promised you guys that the main focus was the PM session, and I promised you that that's when the real count would come out, and it delivered. But okay, yeah, one more thing I actually do want to outline. I'm glad Akagi brought up time, because if you take a look here, when did this? I mean, it's almost hilarious how precise this is with the timing aspect. When did this expansion take place? What's this? 2:50 to 1:10 p.m. What is that? It's one of the PM session macros. When did the expansion up into the buy side liquidity take place? Right within that macro.